Okay, today we are going to be doing a general ledger. This is the past paper, March 2019. The information below was extracted from the accounting records of Mawaza stores during January 2019. Required 3.1. We are going to be doing the debtors control account and the trading stock account. So both of these accounts, they are the assets, meaning that they increase on the debits and then they decrease on the credit side. And B, balance the accounts at the end of the month. The following balances appeared in the ledger on 1 January 2019. So these are the opening balances on January 2019. So they are given. Let's go and record them. So the one for the debtors control, it's already recorded. Even the one for the trading stock, okay? And then B, extracts from the journals on 31 January 2019. So remember, we're doing the debtors control in the trading stock. So here in the CRG, we have the cost of sales. Remember, the cost of sales, they affect the trading stock. Because in the trading stock, we record the cost price. So whenever we are selling the goods for cash, what happens is that the first account that is going to be affected is the bank, because the bank will be increasing on the debit side. And then another account that will be affected, it is going to be the sales, because it will be increasing on the credit side with the bank. Then the bank increase on the debit with the sales. And then another account that is going to be affected, it is going to be the trading stock, because when we are selling the goods, it means that the goods that we have in a business, they are decreasing. So the trading stock decreases with the cost price, which is the cost of sales. And then the cost of sales, the expense will be increasing on the debit side. So with the account of the trading stock. So this is how it goes. Right, so let's go and record. Cost of sales. The cost of sales is decreasing because in the CRG, the trading stock is decreasing since we are selling it. So let's go and record it. 10,160. So 10,160 CRG. So this is the cost of sales. This is 31 January 2019. Right. And remember, we're also doing the one for the debtors control. So here is the debtors control. They also gave us the discount allowed. Okay. So when the debtors pay the business, so it means that the debtors control, they are decreasing, right? And also the debtors, they have to decrease with the discount allowed. So let me show you this. That what happens when the debtors are paying the business. Okay. So when the debtors are paying the business, the bank is increasing because we are receiving money. So it increases on the debit side with the account of the debtors control. So debtors control is decreasing since the debtors are paying. So debtors control is decreasing. with the account of the bank, right? But then, when the debtors are paying us and we're receiving money, if we give them the discount, it means that debtors control is going to decrease with two amounts. It is going to decrease with the amount of the bank and also with the discount that you have given the debtors. Like this. And then the discount allowed will be increasing since it's an expense, it decreases on the debit side with the debtors control. So it means that now that we are going to record in a debtors control, we are going to be recording like this since we are posting from the CRJ. So it's going to be the bank, 17,800. So this is 1 January 2019. So we have the bank, we've got the discount allowed, CRJ. $17,800. And then the discount is 680. Now, the reason this 17,800 is recorded as an account of the bank is because this 17,000, it is the amount that you have received. Okay, so let's continue. CPJ. So you can see we have the trading stock. We also have the debtors control. Now, how are we going to post? Now, when we are posting from CRJ, when we are posting from CPJ, posting from CPJ, you must debit all other accounts except for discount received. And then we are going to credit the bank. Why are we crediting the bank? It is because in a CPJ, the business is making the payments. So therefore, the bank will be credited. Since it's an asset, it decreases on the credit side. So it means that when we are posting to the trading stock will be debited with 26,670. So what happens here? It means that here the business was buying the trading stock for cash. So the trading stock is increasing on the debit side with 26,670. So it's CPJ increasing with the bank account. So this is on 1 2019 January. Right, and then the debtors control. Now it should be debited. Like I said, you debit all other accounts, then you credit the bank. But then just ask ourselves, why would the debtors control be debited with the bank? What does it mean? It means that in here, we are refunding the debtors. So we're refunding them because it means the debtors, they paid us more. So if the debtors paid us more, it means that the debtors control decreased more. So when you are refunding them, it means that the debtors control will be debited. So with 1,200. So it's 1,200 CPJ with the bank account. Let's go to the next one. Debtors journal. Now, debtors journal here, we are selling the goods on credit, or we are issuing the invoice. So when we are selling the goods on credit, this is what happens. So when we are posting from the debtors journal, we post like this. Debtors control is debited, and it goes with the account of the sales, since we are selling the goods on credit. Then the sales will be increasing on the credit side, since it's an income, it increases on the credit side. Then the trading stock, since we are selling the goods, the trading stock will be decreasing. And the trading stock, it is using the cost price, which is the cost of sales. Then the cost of sales will be debited, since it's an expense, and it's increasing on the debit side with the trading stock. So remember, we are doing debtors control and the trading stock. So we are going to go to the debtors control and debit it with the sales. The sales, it is 2848. 2848 DJ sales. And then we're going to go to the trading stock. Then we're going to credit it with the sales, with the cost of sales of 22,784. So it's DJ cost of sales. Right, so we are done with the debtors journal. Now let's go for the debtors allowances journal. So with the debtors allowances journal, so in this case, it means that the debtors are returning the goods to us as a business. So when the debtors are returning the goods to the business, the people that are owing the business, which is a debtors control, they are decreasing since they are returning the goods. So it means that now the money that they are owing us is going to be less. So the debtors control, they are decreasing on the credit side. Now they decreases with which account? They decrease with the account that is called the debtors allowances, which is a new account, which is an expense. So this account is an expense, debtors allowances. It's an expense, so it increases on the debit side. So it's going to increase with the debtors control. Now, this account, it decreases the sales. Okay, this account, it decreases the sales. Okay, now debtors control is decreasing. Now what happens to the trading stock? Now because the people that are owing us the money, they are retaining the goods. So it means that the goods, they are now increasing. And the trading stock, it increases on the debit side. So it increases with the cost price, which is the cost of sales. Remember, we're using the double entry system, which is saying that if something is debited, it must also be credited. So we come and credit the cost of sales with the trading stock. So remember, we are doing the trading stock and the debtors control. So it means we're going to go to the debtors control and decrease it with the amount for the debtors allowances, which is decreasing the sales, which is 4,800. So we're going to go debtors control, $4,800 DAJ. So it's a debtors allowances, right? And then trading stock is increasing with the cost of sales, which is 1,780. DAJ, cost of sales. And then now, creditors journal. Now, what do we do with this one? What do we do with the creditors journal? So in the creditors journal, this one, the business is buying the goods on credit. So when we are buying the goods on credit, when we are posting from the creditors journal, we must debit all other accounts. And then we're going to credit the creditors control. Why are we crediting the creditors control? It is because the people that we are owing money, they are increasing. So the creditors control, which are the people that you are owing money, they increase on the credit side. Since they are a liability, so they increase on the credit side. So we debit all other accounts, then we credit the creditors control. So it means that we are going to go to the trading stock and debit it with 20,715 trading stock. So it says CJ. The account that we're going to write in here is going to be the creditors control, since we bought the goods here on credit. So there's no debtors control here because we are buying on credit. We are not selling. Then we have the creditors allowances journal. So with the creditors allowances journal, we are returning the goods back, or we are returning whatever that we bought on credit. We are returning it back. So when you are returning it back, it means that the people that we are owing money, they are decreasing. And the creditors control, they decrease on the debit side. So it means that when we are posting from the creditors allowances journal, you debit creditors control, then you credit all other accounts. So it means that in here, the trading stock will be credited. Why are we crediting the trading stock? That is because we are returning it back to the suppliers. So when we are returning it back to the suppliers, it means that the trading stock is decreasing, and it decreases on the credit side. So we go to the trading stock with 2.7 CAJ. So with the account of the creditors control. Now we are done. So let's balance this account. Now we check which side is big. So let's calculate and check. So the bigger side here is the debit side. So we choose 26,000 plus 24 plus 1,780 plus 20,715. That is going to be 74,005. So it's 74,005. Now we have to find the difference so that you can see that how much trading stock is left. So we take this one and then we subtract all these amounts. So this is going to be 74 minus 10,160 minus 22,784 minus 2.7. That is going to be 38,361. So it means that the balance of the trading stock at the end of January, the closing balance, it is 38,361. So what do we do with the balance carried down? We transfer it to the opposite side. At the beginning of the following month, it is going to be February. So it's the balance brought down of 38,361. Then we go to the debtors control. We check which side is big. So you can see that the bigger side here, that is the debit side. So let's check that it is how much? 44,698 plus 1.2 plus 28,480. So that is 74,378. So when we are doing the general ledger, what we do is we have to equate both sides with a big amount or with a bigger side. So the bigger side is the debit side. So we're going to equate both sides with 74,378. So once we have done that, now we have to find the difference. That the bigger side, it is bigger by how much? So we have to subtract all of this. Minus 17,800 minus 680 minus 4,800. That is going to be 51,098. So this is the closing balance of the debtors control. So it's a balance carried down, which must be transferred to the opposite side. At the beginning of the following month, that is going to be February. The balance, the opening balance of 51,098.